You may learn about investing and how to make the best financial decisions for your life on Investor Facts. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. When it comes to the technology industry, we must discuss recent developments in the stock market. You know, the top 5 IT companies on the stock market released their quarterly earnings report this week. All of these firms reported earnings this week, and if you are following their stock prices, you probably noticed a lot of volatility. However, what was really fascinating was what the companies were saying about their entire company, not what was occurring with the stock prices. You see, there is a lot going on in the world right now, and it is showing up in the stock market, particularly in these tech stocks. By paying attention to what the companies discussed this week in their quarterly earnings reports, we can learn a lot about the overall economy and the direction of the stock market. There were some things mentioned I believe you can be optimistic about if you are planning to invest in these companies for the investors who want to do so in order to build wealth for financial independence. But there are also some things you should be cautious about if you are planning to invest in these companies. Before we get started, let's quickly review the quarterly reports for each of these 5 companies and analyze some of the good and bad points. Amazon's sale came at $127.10 billion, but analysts had predicted $127.46 billion. And thus, the company's stock price fell sharply as a result. Keep in mind that although Amazon's revenue was lower than anticipated, it is increased by 15% year over year, despite the stock price's terrible performance during the previous 52 weeks. In the third quarter, Apple generated more than $90 billion in revenue, exceeding Wall Street's forecast. As a result, the stock price of Apple performed well when it released its earnings, but it is still down nearly 15% from its 52-week high. Alphabet announced sales of approximately $69 billion, but Wall Street anticipated more in the range of $70 billion, and as a result, the stock price declined. Although we have previously discussed Alphabet, one of our favorite stocks, it is still down roughly 37% from its 52-week high. Now, out of all the other firms we're discussing, Meta has far the lowest quarterly report. What's particularly intriguing is that when you add up all of these businesses to obtain the average growth for the 5, you discover that revenue increased by roughly 9.4%. As you can see, there are several recurring themes that pose a threat to the profitability of this organization when we dig deeper into these quarterly reports. Slower consumer and business expenditure on their goods and services was the first issue that all of these businesses addressed. Less people are making purchases at these technological companies, and as you can see, that this affects firms like Google and Facebook that sell advertisement to other companies. Inflation was the second issue that all of these businesses discussed. For many of these businesses, inflation entails increasing costs and expenses, which obviously hurts their profitability. Higher loan rates were the next obstacle mentioned by these businesses. Of course, inflation has raised interest rates, but many of these enterprises still need debt to finance a portion of their operation since debt carries interest. These businesses are spending more to pay off their debt, which naturally affects their profitability. The war in Ukraine and its repercussions, including rising energy costs, political unpredictability, and people becoming simply too afraid to do certain things, have been mentioned as the next challenge by all of these businesses. All of these factors have had an impact on the profitability of these businesses. The next problem was dealing with fluctuation currency exchange rates. The US dollar is currently quite strong in comparison to the euro, the yen, the British pound, and the other major world currencies. And these businesses are multinational ones that do businesses all over the world. Internet businesses have such a broad impact on the economy and the world. These problems are not exclusive to them. The way internet businesses conduct businesses might magnify these kinds of difficulties. The lower revenue and growth projections made by all of these companies. Wall Street and investors undoubtedly drove down the price of these equities. You'll notice that a lot of investing has to do with growth expectations. And IT businesses are all about those expectations for the future. Things that they want to accomplish that will revolutionize society and generate enormous wealth, even if tech corporations publicly announce that they won't be undertaking as many of these projects in the future. This social media corporation will provide you with virtual reality that you may live in, participate in, and use your daily life. Companies that make predictions about the future that are too far off tend to suffer. As a result, if these businesses spend excessive amount of money on research and development, incur excessive debt, or grow their businesses quickly despite the current economic climate not supporting it, they may also suffer. Stocks of these companies will suffer. And what is exactly what is occurring with Meta? After considering all of the foregoing, many of you should be asking yourself if you are investing in the stock market and what you want to make investments in the IT industry. What approach should you take? Because many of these businesses appears to be discounted. I mean, some of them are down 70% from their 52-week high. Although, Meta may be one of those companies. The sector as a whole is declining heavily on average. You see, I've always made an investment in each of these businesses, whether it was through a technology sector ETF, a total stock market index fund, or directly in the firms themselves. I simply follow my investment plan, which specifies a specific allocation into the specific company's individual stocks, ETFs, and index funds. I've done the research in advance, and I review these quarterly reports to confirm the assumptions I made when I first invested in these companies to ensure that we still want to do so. As a result, my advice to you is to create an investment plan that takes into account your goals, objectives, risk tolerance, and timeline so that you can know how to approach investing in this kind of company at times like these. Due to its instability, technology may not be for everyone. However, for some, this may be the solution they have been looking for. You've been waiting for this chance to purchase investments at a discount while stock prices are at historic lows. In any case, it is always up to the individual how they want to construct their investment strategy. As a result, I hope that this video has given you food for thought and assisted you on your path to financial independence and an early retirement. Thanks for watching the entire clip. If you like it, kindly let us know by hitting the like and subscribe buttons. Also, don't forget to enable the notification bell so you can be the first to know when we post a new video. In the following video, I'll see you. Goodbye.